Transformative Investment in Climate Smart Agriculture. The next decade requires technology innovation for farmers and ranchers to fulfill its promise to transition to and enable the transition to a net zero economy. What we want to talk to you about today in this webinar, if you can go to the next slide. We're gonna spend the time hearing from our report authors. I know many of our working group members, thanks for joining, have been part of this. We're gonna hear from David Bennell, who's really gonna set the stage a little bit for the report and what's really been happening in the marketplace. Then we'll hear from Rob Trice from the Mixing Bowl about ag tech and the future as we see it and how farmers can take advantage of that and the sector could take advantage of it. And then transformative finance, we'll hear from David LeZaks from the Croatan Institute, who really spent time looking at new financial mechanisms that could take action on ESG, different investment strategies. We'll spend majority of the back end of the call just level setting for you guys. And we'll take a lot of Q&A as it's going and how to get involved. So I want to take just a minute to really thank our United Soybean Board and the farmers and the board there and the staff for really stepping up and recognizing that we needed new and growing ESG investment. Ramsey Huntley from Wells Fargo, who's been incredible partners to fund this effort and get it going as an angel grant. Additionally, that allowed us really to put together really a rock star working group. And some of our members are on the line, so you guys also ask ourselves, how can the food and ag sector in the United States really take advantage of the upcoming ESG investments and really stimulate investment in the next decade so that we can meet our goals and fulfill our potential for community and the planet. Here you can see a lot of great volunteers across the value chain, and it's without their hard work and volunteerism, we couldn't have gotten this report off the ground. So just special thanks there. So just to kind of give a little bit of level set on kind of how we got to this point. We've been putting forth this decade of ag, a common vision and compact, and in 2019. Many of the leaders said, we're not going to get to the next decade unless we have fundamental investment in the sector. And the second is because we know that agriculture has already been doing such a great job reducing its carbon footprint, improving soil management, really adding to conservation. We're already on a trajectory of really fulfilling some of our environmental aspects. Working group in 2019 also said, given that trajectory, we're likely with new technology, existing technology already in the pipeline, and we don't have to wait. We just need adoption and really to clear some of the financial hurdles. We're on a trajectory to reduce likely a carbon footprint by 3.8%. And then with investment in frontier technologies such as crop breeding, new types of root system, biochar, and we could maybe be net negative, making agriculture potentially likely the first sector that has the potential to not only reduce the carbon footprint, but have a handprint in society with current pipeline and advanced innovation in frontier technology. That's a big news, right, compared to other sectors. And we think that we are a sector that has the people to get it done. And when we think about climate smart agriculture, it's really about making sure we have the productive potential to meet our future, that our farmers are adaptive and resilient as we think about climate change, and that by doing so, that they could have the ability to draw down and really help meet some of these climate challenges. We then looked at the business case. If that's really true, that that's what our sector could potentially do, then we kind of asked ourselves, like, why isn't anyone talking about it? Why doesn't people really recognize that the brown and green stuff are the cool stuff and our farmers are doing amazing stuff? Go to the next slide. And we see this other trend that there's these investors that are really, and David and everyone will talk about it, it's very exciting, but there's these new investors that are really trying to look at how can I invest in good things, environmental or community initiatives, get a return seeking. But you'll notice for the first time this year that agriculture finally got front and center. We've been concerned over the last year that agriculture actually wasn't included in a lot of the ESG commitments. And we felt that agriculture really has a role to play both in carbon commitments, environmental commitments, and community commitments. Case in point, in 2020, in Q3, we saw $10 billion in new corporate climate bonds, environmental bonds, and agriculture wasn't included in the table. So one of the things we're asking ourselves, if agriculture is such a sector where green happens, where rural vibrancy happens, and when you invest in agriculture and you invest in technology, we certainly can see a payback to our society, then why isn't the financial sector really, when they think about ESG, thinking about this sector as their #1 sector for investment? So that's the frame of the report. I'm going to turn it over to David Bennell, who's going to walk you through a little bit more about some of the context setting with the market and help facilitate our panelists.
Hey, thank you, Erin. Good morning, everyone, and probably should say a good afternoon for any friends joining us from across the pond in Europe. Greetings from the East Coast of the United States in Maine. And wanted to echo Erin's thanks to our funders, Wells Fargo and United Soybean Board, and the amazing co-authors, Rob Trice and David LeZaks, who you'll hear from in just a minute or two. In fact, my job is to get on and get out of their way so you can really dive in with us into the meat of the report. Please use the chat box. We're absolutely interested in taking your questions. We look forward to them. Very briefly, I work for the World Business Council for Sustainable Development. We are honored to be a part of this report. WBCSD is a big 200 company CEO-led membership of companies from across the world, but importantly, about 83 of our 200 members are active in the food and ag space. And they're the ones that you'd think, and I won't call them out, but also tech companies like Google, Apple, IBM, Microsoft, and others, very active in the food and ag space. So Erin very beautifully, I think, teed this up. So why this report and why now? Well, why this report is, I think Erin just said it, why it begs the question, why isn't agriculture and land use on the radar screens of everyone, and why hasn't it been for some time? And as Erin points out rightly, that's beginning to change, and good thing. So when we were sitting around at the amazing Honor the Harvest in Maryland, the big USFRA event, wondering these things, it was actually people like Secretary Tom Vilsack and others that started to ask the questions. USDA, our amazing land grant universities, others have done really interesting and compelling research on how much money is in US Ag, but what's the really current research show? And again, you'll hear from Rob and David in just a minute as to what that is. And spoiler alert, David LeZaks, sorry, but I just have to say this. It's almost $1 trillion in private capital flowing across the United States every year. And it begs the question, if there's that much money flowing, probably you're wondering how come more of it doesn't flow to farmers and ranchers. So it really is an interesting opportunity, particularly with the new administration signaling by almost everyone. Janet Yellen, Secretary of Treasury, talking about reinvigorating the community development finance institution world. I think my friend Gray Harris from CEI is on this call. Looking at new markets tax credits, looking at small business administration, looking at really invigorating rural communities. I mean, what an idea. But it's not just the Secretary of Treasury. We also have the Secretary of Defense, Secretary of Transportation, and of course, incoming Secretary Tom Vilsack of Agriculture, all talking about what Erin referenced, that ultimately we can't do anything. We can't feed the nation. We can't fuel the nation. We can't bring the nation out of the pandemic, not sort of back to normal, but into the new normal without agriculture. Next slide, please. Well, as we wait for that to transition, very briefly, as we look at how much the big nut is that you'll hear referenced again, particularly in David LeZaks' presentation, We invite questions and comments about how to get there, ideas that you might have. We encourage, again, liberal use of the chat box. I would just ask you, it's fine to disagree with the findings. It's fine to disagree with us, the authors. I would just ask you to disagree without being disagreeable. And Rob, I'm just biding some time waiting because I know you have some really important slides to show once you get that next one up. Thanks. What do we show here really supports the investment case for climate smart agriculture. I came from a big $27 trillion investor network, and you might ask the question, if you didn't invest in renewables in about 2007, 2008, maybe 2011 at the latest, and you missed that moment, boy, investors, you don't want to miss this moment now. Agriculture is the investable space, but not just investing so that the big institutional investors and even day traders make money, but making sure that this money flows across the US ag system to help reinvigorate communities and ensure that farmers and ranchers are paid for services. How to do that, we make some recommendations about innovations. Again, you'll hear from the cooperative about that. And then really looking at soil specifically. Many of you on the call are more expert in this than I could ever hope to be. I'm from a failed Ohio farmers. About a century ago, we got out of the farming business and started to build golf courses. So I know a little bit about growing things, but that's only grass. But really looking at healthy soils as a route to mitigating carbon emissions, but also doing so in a way that advances equity and nature. So there's really a tripartite here, right? Which puts the human piece absolutely front and center. Next slide, please. So Rob Trice of the Mixing Bowl, over to you. You've got some amazing things to say. And then I would just ask you, if you don't mind, segueing right over to David LeZaks once you're done. And again, folks, please feel free to ask questions in the chat box of any of us. We've got a great team on the lookout for that, and we'll make sure we get to Q&A a little bit later. Rob Trice, over to you, and thank you.
Thank you, David Bennell. So there are a lot of reports out there about the potential of climate smart agriculture. What we tried to do with this report is really make it practical and actionable. And so as I identify these practices that we looked at, what you'll hear is that all of these practices are available to us now, as Erin indicated, and they are, just to be clear, they're practices that take place in field, that keep ag land in production, and they improve soil health. All of the practices improve soil health, sequester carbon, reduce erosion, increase water filtration, and lead to economic and environmental resiliency. And we all of the practices here listed embrace the 5 principles of soil health, and that they minimize soil disturbance, they maximize plant diversity, maximize living root and soil cover, and they integrate crop and livestock systems. So you can see those practices there. What we did with this report is we really looked at these specific practices and interviewed farmers and ranchers to understand what are the barriers to adoption. And then from that, we really looked back to see how finance and technology could be applied to help ease that transition to these practices. One thing that became evident in our interviews, we kept hearing this phrase, "We took a leap of faith." For whatever reason, the farmers that embraced these climate smart practices took a leap of faith. And what we want to do is investigate in this report, how can we use finance and technology innovation to make that leap of faith a shorter hop? And so that ultimately farmers and ranchers can embrace these practices in a confident stride. And they can do this knowing that they have the information to optimize their practice implementation, and that they've got an economic market reward for making the transition to these practices. So as we lumped those barriers that we heard about, why aren't these practices being implemented today, we really saw 4 buckets. And let me just go around and talk about each one of these very briefly. There are economic factors. Those are the obvious ones. Do cover crops make sense? How am I going to pay for a roller crimper or a no-till drill? The other thing to point out here in the economic factor is that currently we don't really have, we have a lack of premiums for the products that are produced this way. Secondly are the personal motivations. Every farmer or rancher has their own level of adaptability. They all have their personal circumstances, looking at their level of risk that they're capable of taking. And they also have to recognize that some of these practices do take more time. It may be many seasons, a few seasons before the benefits are realized, and it may take more effort. So for instance, if you're going to do managed grazing, you may have to go out and move fence more frequently, more planting for a cover crop and so forth. The external concerns, going to the bottom right here, talks about land tenure and policy programs. Land tenure, let's acknowledge the fact that 50% of cropland in the United States is leased or rented, 25% of pasture. If you don't have a long-term incentive to maintain that land and its soil health, you may not want to take on these practices and the challenges that they face because of the costs and so forth. And on policy and programs, yes, that can relate to government programs, but it also might relate to something like an insurance policy. Perhaps the farmer's insurer doesn't account for the climate resiliency that is experienced from cover cropping. And lastly is information implementation, and I'll talk a little bit more about this. So we'll get more into the locale-specific and practice-specific information. One thing that we need to recognize is the operator support structure, in the sense that too often I think we think that the farmer or rancher, if we could just get them to convinced on the benefits of these practices, that's all we need to do. But I think one of the things we need to do is recognize that these farmers and ranchers work in an ecosystem. And every one of the actors in that ecosystem, whether that is an input provider, an extension agent, an agronomist, an off-taker, a customer, an equipment provider, they all have a role to play in helping or hindering the adoption of these practices. And so on the technology side, I'll get more into it, but one of the things that we definitely heard was that farmers and ranchers, we don't yet have locale and practice-specific information. So again, if I'm going to do managed rotational grazing in California, that's going to be very different than how I might do that in the Carolinas because of the different weather patterns and so forth. Can we go to the next slide, please? Yeah, so I'll start to tee it up as there we go. So what we did in this in the study is we actually went and we identified 150 different climate smart soil technology companies that, and I'm not going to go into each one of these categories or so forth, but the technologies are out there. Yet when we hear this, when we have 150 different technologies, we need more, we need better. So currently, about 25% of farmers and ranchers are even doing any soil testing. The vast majority of that testing is being done for NPK recommendations. Far less is being done for soil organic matter, soil organic testing. So I think if we just kind of to summarize what is on the slides, we have a lot of technology companies out there, but they're not connected. And we really need to look at two things. One, how can we ease the burden of collecting information from the field, specifically looking at soil data? And then the second thing is, how can we connect that data to other databases? And so we talk in the report about two important things. One is FMS, Farm Management Systems, and the other one is MRV, Management, Estimation, Reporting, and Verification Platforms. And what both of these do, the FMS and MRV is act as a vessel or a platform to aggregate that information from a field and then be able to share that information with ecosystem partners as a farmer or rancher chooses, so that we can start to get a virtuous flywheel going, so that now we can understand, get better information exchange about different practices and different locales, and get to that point that I mentioned earlier about getting to optimizing practice implementation. The other thing we could do by connecting this data and connecting it downstream is share it with economic partners who can then financially reward farmers and ranchers for making these practices. So really, if I kind of just summarize what we found, there are technologies out there today. We need to see more adoption of this technology. So currently 69% of farmers and ranchers are not using software on the farm. That needs to improve because you can't manage what you don't measure. And then we need to get this connection of the data. And then maybe I'll just stop right there. And David LeZaks, can I hand it over to you?
I do believe you can. Thank you, Rob. And my name is David LeZaks, coming from the Croatan Institute. We're a nonprofit whose mission is to harness the power of investment for social good and ecological resilience. And in this report, next slide, please. We're building not only on our work across our portfolio of investment and finance within Croatan Institute, but over the last couple of years, we've been working with USDA support through their Conservation Innovation Grant Program. And about a year ago, we came out with this paper on soil wealth, investing in regenerative agriculture across asset classes. And in that paper, we defined soil wealth as the constellation of benefits associated with investing in soil health and community wealth. So in this, while the remainder of my remarks are really going to be focused on how do we drive investment into this space, I thought it was important to really lay the groundwork from the perspective of it's not just about either the soil health perspective, it's not just about the investors and providing an opportunity for investors, but really it's about community wealth and how do we make sure that farmers, the communities they live in, and the ecosystems that they steward become front and center in many of these discussions, even if we're throwing around large sums of money and figures like trillions of dollars here. Next slide. And so, while David Bennell has already put forward the punchline of at least this part of the talk, through the work, one of the things that we know we needed to do was to really get a baseline of what was happening in the agricultural economy. Many of the, at least from the financial side, what those flows of capital look like. And while many of those reports, you saw some referenced in Rob's section, really focus on an asset class by asset class basis. So what's happening in the venture capital space and what's happening in the public equities. But when you start to take a total portfolio approach, we began to list in the middle section of this figure, we look at all of the different kind of asset classes, whether it be farmland or commodities or fixed income, where most farm debt comes from. Then we get a fuller picture of what's happening, and we see where interests are and where capital is flowing from institutional investors, retail investors, certain pieces of government, all the way through this kind of agro-financial system to the agricultural value chain companies, farmland, and farm operating capital. And one thing we know, as Erin began to say in the beginning of the talk, is that over the last decades, the interest in ESG, environmental social governance investing, impact investing, has just begun to skyrocket. People know where their money is going, what it's being used for, and they want to have a connection to that and ensuring that it's aligned specifically with their values, whatever they might be. And since 1995, the US SIF Foundation has been putting out a report tracking how these ESG and sustainable investing trends have been playing out. And in this last report that Croatan Institute contributed to on the research side, they found that $17.1 trillion, or about 1 in 3 invested dollars in the US, were invested in some kind of ESG strategy. And that is a 42% increase over the last time they did the survey about 2 years ago. And when we began to see capital beginning to flow into this area, a need for additional capital to flow to begin to invest in some of the strategies that Rob talked about, and we began to paint a fuller picture of what a climate smart agriculture sector could look like. And again, it's not just from the perspective of bringing in more capital, as that's that by itself isn't going to fix everything, all the challenges we're looking at addressing here, but really it's about how do we take more capital and also make it better capital as well. How do we structure that capital so that it meets the needs that that we're aiming for here? It's very possible to bring in more capital and leave our agricultural systems that we're trying to steward better, especially for climate smart outcomes, in a worse way than they are now. But so it's the message here is, how do we take both of those additional capital and finding the appropriate mechanisms then that capital can be deployed in, that's going to really bring about that transition to generating soil wealth and the climate smart agricultural outcomes. Next slide. And so we think there are many paths to doing this, to scaling up climate smart agriculture. And as we saw here, or as we see here in this slide, that there's, out of this $972 billion, about $950 billion of that is coming from private market strategies, different investments across those different asset classes that end up in one or more places within the agricultural value chain. And of course, there's government has a piece in this, and in some of the programs that they provide. And then there's this new piece that a lot of folks are talking about that we wanted to make sure to at least mention, and that is these payments for ecosystem services and carbon credits. And according to our colleagues at the Ecosystem Service Market Consortium, they put out a paper about a year ago that looked at about what they thought was the market potential of around $14 billion in the US. And we think that is an absolutely critical piece to kind of moving toward a more climate smart agriculture, looking at credits from that are water quality focused, water quantity focused, carbon focused, of course, but also wanted to put that in perspective in terms of that $14 billion related to the $950 billion that we know also it will likely grow over the coming years and decades. And so in agriculture, in many cases, especially on the farm level, where it's really made on the margins, and those dollars could really help. And I think it's those dollars, the timing of those dollars in relationship to some of the climate smart outcomes that we're seeing from the adoption of these practices and these systems is part of the puzzle. But we also want to make sure that the other pieces of that puzzle are addressed as well. Next slide. And so just to sum up some of the recommendations that came out of the report, in addition to ones that I've already talked about, is that we're finding in our conversations with those who are deploying capital and investing that there's really an opportunity to educate and say, here are the risk, return, and impact of these investments. Here are the opportunities. Here are places where there's a place in the sector for your capital perhaps to have a place. We know that there are also new financial innovations and new mechanisms that could be deployed or could be developed. Over the past couple of years, we've seen a number of new funds, a number of new mechanisms that have come out from either existing capital suppliers, banks, and we know that as we get further down the pathway toward a climate smart agriculture, we're likely to see more and need more of those as well. We know there's a need to align the producer's ecosystem and value chain to finance that transition. We know that some of these climate smart agricultural practices have a longer payback return than some sources of capital are being deployed for right now. As Rob talked about, there's an opportunity to leverage information technology on the farm, off the farm, through these financial transactions across really this entire space. We know that there's opportunities to blend capital or bring in catalytic capital or risk capital to begin to de-risk some of these transactions and transitions. That's one of the places where we concentrate most of our time, is kind of bringing in this risk capital into the space. And because these transactions and this kind of this capital moving into the system is something that's new and foreign for some, but we think that there's ways to make it easier and to learn from those experiences. And we're just going to have to learn by doing. And in these transactions, in these landscape shifts, in these financial shifts, there's really no better way than to learn by doing. And to answer one of the questions that came in very early about how do we stimulate market uptake of this, is that we need to demonstrate that what these transactions look like. How do we present those in a way that can be reproduced should they work? And really, this report and a lot of these outcomes are really an invitation to the sector, to both the agricultural side, to the financial side, to find places where new innovation is possible. And we can use this report as the beginning for a test bed to figure out how to finance climate smart agriculture. Thank you.
David, Rob, thank you. Erin, do you mind joining us too? And Rob and David, can you come back on with your videos? Thanks. Folks, I misspoke. But you're smarter than me. You figured out it's the Q&A box. Your chat was disabled, so sorry about that. If you do have any other questions you want to ask, we are paying attention. So let's get right into it. First of all, Rob or David, is there anything you meant to say and you want to sort of come back and cover before I launch into Q&A? It's one of those, oops, I forgot to say something essential. Or are you ready that we just get right into it?
I'm ready to get right into it. I'm hoping you'll give me a swing at the bat on Greg's question, and maybe Jones too.
Well, perfect. So thank you, Rob, Trice. You were going to get Greg's question the first swing. I wouldn't call it a softball, but Greg asks a question and makes a point that ultimately we're going to need transactions, and many of them, to drive real capital value and get, frankly, the attention of the capital markets. They like nothing better than activity. So I'm sure you have the answer to all of this, Rob, but what thoughts do you have there? And then as Greg also follows on toward the bottom of the Q&A.
Well, I'm going to take the top. I think that Greg's second point is probably,
could this group help facilitate it, Rob?
Exactly. And I, when we undertook this project, I got a pinky promise from Erin. Everyone here is going to laugh. I'm a bit of an action-oriented guy, and I didn't want this report to end up as yet another paperweight on somebody's shelf collecting dust. And so this is why I'm very happy USFRA stands for U.S. Farmers and Ranchers in Action. And I think that this report for me has pointed out the need. And, the marketing folks, I don't think like it, but I call it the tic-tac-toe. How can we go connect willing producer ecosystems, provide adequate data, and make sure that we also have those parties that can reward farmers and ranchers for taking that transitioning to those practices. And the more that we can line those different transactions together and create those value chains, that's kind of the next step I see as the next step coming, the springboard from this report. I don't know, Erin, do you want to say anything on that?
Yeah, I would just say, I mean, the working group, I know many of you guys are on the line, and the working group, I think we've been hearing about this report. We finally have consensus on the numbers and the different financial mechanisms. I think everyone's like, okay, let's go pilot it. I think that's exactly where we are. In many cases, this report, while it's long, is almost the opening forward to a much bigger, it's more than a report, it's more of a movement. That's why we call it an action network. So we are really looking for willing volunteers to kind of roll up their sleeves. And through that, we can share best practices, learnings to help make the community smarter, faster on this topic.
And then David B,
yeah.
do you want David L to take the second part of Greg's question, or would you like me to answer Jones?
No, David L, let's stay on Greg for a second. Do you need me to reframe or re-ask the question, or do you see it, David L?
We should strongly consider how this group could organize a series of transactions. That question?
Correct.
Yes. Absolutely, and I think that's, as I began to speak to that question at the end of my remarks, and that both agriculture and finance are both transaction-oriented industries. And what we're talking about here is a new set of transactions. And I think what we laid out in this report and in the partnerships that have come together as part of the working group and the preparation of this report is a selection of the players who could be involved in organizing those transactions and kind of putting forth what these look like, how they work, and how these transactions can also become equitable across those involved, for the people, for the land, for the investors, for the industries that surround them. Now is the time to talk about how we structure these transactions so that they really work for everybody's best interest.
And Greg,
David,
yeah,
just to jump in. So Greg also asked, has this report been positioned in front of the key banks supporting the transition to climate action as part of COP26? Maybe very quickly, just to say, we've started that process.
And that's also what Greg's doing too, right, Greg?
Yeah, I know, Greg, we're counting on you as a change agent there. I think that gets to this broader context about like the timing's right. Like there's a lot of different movements, and if we don't make the market and really help partner with the financial community, they're left unanswered, they could come to a different conclusion, right? And so we want to make certain that they are very much aware that this sector needs economic investment. This sector can solve community and can solve for the planet. I want to answer Paul's one here. These types of investors do look for a return, seeking an investment return, but they tend to have different expectations. David, I would love to hear, how do we deal with the fact that farmers' returns are not necessarily high enough to attract institutional capital? I mean, we're not going to be Silicon Valley, guys, but we certainly have a different long-term portfolio proposal for these types of investors. I often been kind of tongue-in-cheek saying, you can continue to invest in Elon over the next 10 years, but what else, if you take a portfolio investment, you usually have different types of investment strategies. And maybe we're not getting these high level returns. We're getting a different type of institutional investor, maybe that's looking at bonds or is willing to have a lower return seeking investment for higher environmental climate benefits. So, as you know, with investment strategies, there's different types of investors for different types of needs. We need to make certain that agriculture is seen as a unique portfolio inside those ESG investors. So David, I would love you to address that too, about market making and really making sure that ag can seek a good return, but it's not Silicon Valley kind of.
Sure, and Paul's an investor, so he knows this from an experiential perspective. But really, this is all about total portfolio activation. It's really about finding the appropriate risk, return, and impact strategy that a deployment of capital through a financial mechanism will have, and matching that to both the appropriate project and then back to the appropriate source of capital. So again, from the market making perspective, every dollar out of in an investor's pocket could be a dollar out of a farmer's pocket. But what we really want to see here again is from that equitable perspective of how do we find the places where this could work, where these more appropriate financial mechanisms and appropriate sources of capital can be used to drive this market making.
Let's take it right down to the soil. We have a question from Ann about how we might see farmers and ranchers finding funding flowing onto their family farm from these sorts of efforts. Any ideas for Ann?
Rob, you want to start? Otherwise, I can.
How do we help ensure these capital flows, either the trillion that is currently approximately the trillion that's flowing through, and/or any new funding that we might see? How do we help it flow down to the family farmer and rancher?
Yeah, I'll do the quick 30 seconds, David, only to plug technology, in that we now have online matchmaking platforms, so that you can now, the ease of finding funding is becoming easier. Yet we need to tie more of that to the outcomes related to climate smart ag practices. How's that?
And I would say Absolutely right about kind of farmer education and where a lot of the resources have been spent today. And I think the next wave of education is really around lenders and investors and teaching and exploring some of the data. I mean, literally, it's a report every 2 weeks these days that are showing how the agronomic risk is reduced, long-term profitability increases with these practices. Yet right now, the financial mechanisms that are coming in most case by banks just aren't integrating that into some of these lending mechanisms. So I think there's just an amazing opportunity for education from the lender and investor perspective.
And this is Erin. I would just say so many of our farmers and in particular, I'm going back to some of our conversations, they have a list of things that they want to do on their farm, that they know that can drive climate smart benefits. And oftentimes, depending on how things are going in that given year, different loans, you have to finance it yourself or other. I think that this is really trying to accelerate that decision making so that your long-term list that you have could maybe get done in a shorter time period. And in case in point, like when we talk about how flows could happen. So, if you are, and I use this example, David, I'm probably the worst one, but city of Chicago, and the city of Chicago issues bonds all the time. Could they make an investment in rural infrastructure really to help invest in those water saving technologies? You see in Nebraska, and water management is really critical. It's the same thing. We do community water bonds all the time. We make community infrastructure, but often there's a disconnect between urban and rural. And so that's just an example of how these types of things could really play out. It's really kind of going after new types of investors that could be your partner on your farm.
Can we talk a minute? There are a couple of good questions. Maybe I can conflate them in a good way around data privacy, but also sort of how do we extend this through the value chain? So let me tee up the data privacy one. How do we make sure that that there is privacy to data, but also enable transparency of data sharing so that we can achieve mutual sustainability goals and/or sort of raise all boats economically? Tough question. I know there's no silver bullet answer. I'm on the board, along with Gray Harris, who I've mentioned already today, of Wolf Neck Center, who host Open Team. How do we help farmers and ranchers get access to their data? Rob Trice, maybe to start with you, are there technologies? I know you've got an amazing slide in the report. Or maybe that's yours, David LeZaks. Sorry, either one of you. Start with Rob. How do we ensure that technologies benefit the farmer and rancher, and/or on the other side, help the consumer make an informed choice to reward better practices on the ground in the soils for our farmers and ranchers?
So there's a lot in there I'm going to try to unpack very briefly, but I think the number one thing is the majority of farmers and ranchers that I talk to are okay sharing data as long as they know where that data is going, who's using it, and how it's being monetized. And as long as there's that transparency, there's usually not an objection to sharing data. And I also want to make mention, I didn't in my comments, there is already robust information exchange occurring online using technology through the form of Facebook groups. If you've ever looked at something like Understanding Ag, farmer to farmer, rancher to rancher, data exchange or information exchange is already happening. That said, we mentioned these the FMS and the MRV platforms. These platforms make it easy for a farmer or rancher to control where that data is going. So it aggregates that data, but then it can also help determine where that data is being sent. And I would say that there's a number of different data privacy techniques that we can use, like aggregating data on a countywide basis that can help protect a farmer or rancher's data. That's one way. The other thing I'll say is there are new technologies, and I won't go in the weeds on it, that allow you, allow you to share an answer, not necessarily all of your data. So was there E. coli in field 42? Yes or no? Or did you, and the other thing is we have better ways now to sense things like remotely. So did that farmer use cover crops last season? Well, now we can send a satellite up there and do remote imaging and tell you whether there was indeed cover cropping on that field or not. So I would just say that there is data. I don't want to be dismiss data privacy concerns. They should be taken into consideration, but I don't think that is the reason not to move forward with data exchange. We need to go and make sure that data privacy is being considered as we move forward with these solutions. Oh, and then there's a whole second thing there, which I won't spend too much time on. How do we also make sure that this goes downstream? David, LeZaks, you want to take that one?
Sure. When you say downstream, you mean like, to the consumer, that all the way, that down as opposed to up? Yeah, so I think that where this kind of hits the consumer perspective is really around transparency. And increasingly consumers are interested in transparency from field to fork. And, of course, there are costs from a data perspective, there are costs from logging, there are other issues around, competitiveness, of course, but where it makes sense to be as transparent as possible. I think that's one place to really begin to, have those conversations with consumers and marketplaces, and to do it in a way that, reflects and respects the hard work that's happening, on these farms and ranches. And, these things aren't easy or free, and it takes a lot of work. And in many cases that I think traditionally has been swept under the rug, but I think now is the time to have those conversations to bring some of that transparency forward into the marketplace.
We have a couple interesting questions. I'm going to, again, try and bring them together around what is the capital? We talk about finance as if we all know what the word finance means, but so who is the capital most interested in agriculture? And I'll make the point back to a previous question. To the great credit of Wells Fargo, one of the primary funders of this report, their industry associations, I'm not going to get the acronyms right, but like SFMA, if I have that correctly, wrote an amazing report at the end of last year, published 156 pages. But agriculture and land use weren't very prominent, if at all, in it. So I think what we're seeing, even in the couple of months since, is a switching on. And we hope that reports like this help do the switch on. But I'm wondering, panelists, who do you think, where is the friendliest capital? And even if it's not particularly friendly, because everybody likes to make a dollar, where's the capital that's going to switch on, or you're seeing is switching on already into ag?
David, I'll take this, and I know you want to answer it too. So I definitely think it's the pension funds and insurers. They tend to make longer term investments over 10, 20-year horizons. We've been speaking a lot to that financial community, and it's really interesting hearing their perspective that as the baby boomers are retiring, they don't need such an aggressive return, and they are looking to put their money into more environmentally and social conscious funds. And so they're looking for a more conservative, lower return, and a longer term horizon, of which I think agriculture is a perfect candidate for that type of stuff. Also, these guys are very skilled at investing in things that have community cause where there's risk. Health, if you look at agriculture as it relates to climate change, we're seeing increasingly extreme and episodic events. That type of institution really knows how to make those types of long-term investments for the public good.
And I can just add to that, Erin, from the perspective of, I absolutely agree on the long-term investors. And what to add to that, there have been a number of reports, whether it be from FAO, whether it be, I think, USFRA and others have put out, whether it's we have 60 years of soil left, 40 years of soil left, 30 years of soil left. I mean, like the actual number matters a little less than the ways in which parts of agriculture are depleting our soil now. I come to this report from the perspective of how do we use finance as a tool to continue past the 21st century as a society. And if you till down to bedrock, then the value of that asset from an agricultural perspective is going to be zero. So from whether it's an investor or whether it's a landowner, how do we not only look at this from a returns perspective, from an annually, but if we as the agricultural community are stewarding these resources on behalf of the planet, we also need to consider, what needs to be done from a long-term management perspective, how we do that management. And there's financial vehicles that can help do that. There are 100-year bonds that we're seeing, be used. And it's how do we take that longer-term time horizons and begin to match them to something that in many cases is a much shorter time horizon when we're talking about families and intergenerational transition and quarterly returns and one-year operating loans. So we just have, in many cases, it's an issue of how do we get these different time horizons with different expectations lined up so that we're able to meet these broader societal goals.
So a quick time check. I know, Erin, you wanted to do some closing comments, and let me just ask each of the panelists, Rob and David. Erin, you'll get to drop the mic and do the closing comments. But anything, again, you sort of rehearsing in your head and you're wondering if you should say it, or any fine point that you want to make if you had to do a closing comment. And I'll tie in the last question we just got toward that. We all know, or many of us know, that land in the United States that is farmed is not owned by farmers. In many cases, it's leased or rented. So does that change or color any of the things that you've said, or does it put a fine point on any closing comment you want to make, just to make sure, Chad, we don't ignore you? I do see your questions just came in. So Rob, let's start to you and then over to David, and then David, if you'd hand to Erin for closing comments, and I'll thank everyone for an incredibly strong dream team panel.
I'll say one thing to Chad's point, which is, and I think I mentioned it, which is that 50% of cropland is leased or rented, 25% of pasture in the United States. And so land tenure is an issue. However, there are some cool things coming. So for instance, asset light non-owner operators may start being able to get operating loans that would have beneficial terms for embracing these practices. And now, of course, we have the technology to verify that those practices have been implemented. That might be the kind of thing that we'll see very quickly, I think, where, again, we're looking at the existing capital that is being deployed, and we're scaling up the amount of that capital that is being tied to these kind of practices. So that was just on Chad's specific comment. I think the one thing and that became apparent to me in doing this report is that this is doable. We can, the technology is here. We know the practices. It is not without its challenges, but this is fundamentally something that we can and should take on. And I emerged from this more passionate and more excited about taking the next step into action.
David, your 2-minute drop the mic moment, and then we'll go over to Erin, please.
So just a couple of points. One, on the landowner and farmer perspective, is that, luckily I've seen some really cool, innovative lease terms, and it's not to say that the one-to-one farmer to landowner relationship works or should work for everyone. But I think that there are legal mechanisms, there are lease mechanisms that begin to share the risk and share the reward. And I think we should begin to look at those, and especially as we go through not only a generational transfer of wealth, but a generational transfer of land, those next generations of landowners who might be inheriting land from their parents, if they're thinking about their land the same way they're thinking about their capital, are very likely going to be more interested in how that land is managed and what's happening. So if I had to take a guess, and I don't have my crystal ball in front of me right now, but I think that those conversations in the coming years will be much easier than they have been in the past decade. And one last point around, what's in it for investors. I think that, just like that intergenerational transfer, or generational transfer of wealth, we're also seeing a generational transfer, transfer of power and kind of a framing around investment. And investors need to be able to show their boards. They need to be able to show their asset owners, if it's not them directly, about, again, how their money is working for them or against them in terms of how it's aligning with their values. And I think that investing in climate smart agriculture is multifunctional, and it can provide a whole suite of positive benefits. And I think that that directing investment toward these climate smart and other types of similar types of agriculture begins to meet those criteria and meet fundamentally the different types of returns that investors are seeking.
Right, David, thank you. Rob, thank you. Erin, over to you for closing comments, and be well.
Okay, so my big takeaway on some of these questions I'm hearing, and they're very, very good, is that a lot of this is nuanced, right? A lot of it's new. And I think that what we're doing is really trying to, I saw some comments here about, well, which investors could start investing, what companies have set ESG targets for ag, I think, and what types of returns. One of the things we need to bear in mind is that this has never been done before. We are actually replaying and taking a page out of the renewable energy sector is a way to think about it. We're back in 2007. They knew that sector would have a lot of potential, and they kind of raised their arm and said, hey, we need financial investment to bolt alongside the growth of our sector. We're doing that exactly the same here in the US. They did it through three mechanisms. One, through trading RECs, or carbon trades, and you saw that on David LeZaks' side. They also then worked on federal and state carve-outs. We know we do that well in ag, and we have a lot of groups that do that. But what they did is they really worked with the financial sector to really figure out these new types of investments. I would encourage you, we didn't get to this on this call today. I saw some of the questions there about what are the 7 different mechanisms. There's a lot of case studies and looking at 7 different financial mechanisms. We can maybe do another webinar just on that. But really, I would say it's the opening bell to really ask the question to the investors. We know we need investment over the next decade to drive innovation and technology and support our farmers and ranchers. This is critical. And it's time, as we think of the decade of ag, to really make certain that we're addressing the economic aspect of sustainability. So you go to the next slide. What I would encourage you, if you're interested, I'm sorry, go back one slide. So just again, broadly, ESG, this report is about saying, we do have the technology. We're an important sector. We would encourage, as ESG investment is growing at such a clip, 2 trillion per annum, that those investors should consider ag as their first place for making those green investments. We do know that we need, as we invest in climate smart ag, it helps de-risk, can increase capital flows on our farms, and to really work with farmers on this new field of finance, what we call financial technology. Next slide. How you can get involved. We have a lot of communication toolkits. We'll be putting out a little bit of blogs. Friday, we did a recording specifically geared towards the financial community. I know we in ag speak one language, the financial leaders speak another. And we're really trying to bridge these 2 different types of conversations. That's what we do, is try to build that co-creation model. You can share the report. We'll be developing one-pagers and the like. We have lots of infographics that you saw on the thing. And feel free to also post something on LinkedIn. Next slide. You're already seeing this report really kind of get out there in the media. I'd encourage you to take a look at that. And if you see them, retweet them or post them in LinkedIn with comments. Next slide. We're also going to be speaking at a lot of different conferences. It's our goal at USFRA this year is to really knock on the door of many of these different financial forums that are coming up. Really, again, with that idea of We know we're talking about ESG investment. We know you're talking about technology of the future to invest in. We want you to consider this sector to invest in. So we'll be doing a lot of events. Would love to have you guys in the ag community really tune into those, and we'll keep you posted on our events webpage. And that's really it. If you have, we'll get back to you on some of those Q&As if we didn't address them. I know we couldn't address all of them. We kind of grouped those conversations. You have specific comments, questions, want to get involved. You have a key leader in action that you think should be joining these working groups, please, by all means, introduce ourselves. If you are on the line and you want to say, hey, I'm open for a pilot, or I know a financial institution I can get involved, please definitely reach out. We'll look forward to hearing from you. So thanks again for everyone, and I'll give you back your time.